Yes, I'm back with another trading video. Today I tried to play out the weekly retracement on Friday. Unfortunately, I didn't get the successful trade, but it played out how I wanted it to play out in terms of the market price action. I just didn't manage to get that execution where I wanted it to, so I did take a loss. But I will go into the trade now and I'll show you through what happened. Okay then, so going into the weekly chart, the first thing I look for, because we had this big distribution to the downside here, and we took out these weekly objectives and monthly objectives even. Therefore, you can play the weekly retracement, which is the thank God it's Friday setup, known by RCT. So for that reason, what you would do is you'll mark the entire weekly range from the high all the way to the low. And then what you would do with that is mark 20 to 30% of that region. Like I said, this is only valid if we've had a large distribution during the week, and therefore you can expect some buy-in going into Friday, okay, to give us that rebound of price, especially after you've taken out these liquidity areas. So with that in mind, my overall targets for today was, can we come into this range here? That is what I was looking to do. On the occasion where we go above it, you can expect a market reversal. So now, because we've obviously dipped into liquidity here, we've come above the 30%, you could perhaps look at maybe we're going to get that smart money reversal, definitely on the daily chart, where we can again push these all-time highs again. So we'll have to see how the market reacts. But commonly what will happen is the low or high of the week on the thank God it's Friday setup will form during the morning portion of the New York session, which is what happened. With that in mind, I will drop into the 15-minute, knowing that this is our target area here, where price was, where the low of the day was put in at 9:30. We had manipulation underneath these lows. We took out all of this sell side liquidity after accumulating underneath daily sell side and obviously taking out that Asian range low. So what I was looking for was a change in the state of delivery. So I went onto the 5-minute chart. I wanted to see us close above this down set of candles here to confirm that change in the state of delivery and to confirm the order flow to bullish, where we would eventually come and seek within this price range here. So because of that, I wanted to frame my entry during this bullish order block here. After that, take on liquidity. Despite us not being able to close above it, it is still a valid change in the step of delivery once price trades above it. Therefore, you can trade within this order block here. So it allows you to trade within the order block, even though it technically hasn't been formed yet, if that makes sense. So for that reason, I used the quadrants here. So I've got 75% of these down close candles there, 50% and 25%. So I wanted to frame my entry within 50% of this order block. Onto the 1 minute, we got a very choppy start. Obviously, we took out that liquidity here at 9:30. So we had that early manipulation. Then we chopped about for a bit. We had this fair value gap there from the opening 30 minutes of the range, which I've marked out. There was the first one of the trading session. Put that across on the chart, and it was now acting as an inversion. So this is where I wanted to frame my entry during the macro period. I was very confident we would come to these price levels up here. So I wanted to frame my entry at that point. However, naively or not, I'll get my executions. I'll show you what happened. So I got my first entry here. It was approaching the macro period, so I was quite comfortable that, we'll get that expansion. However, what actually happened was we formulated these equal highs. So we had these equal highs there, which were the target point for price. And I always like to see the market produce these equal highs before I look to go into the trade, because it's easy liquidity. It's an easy draw on liquidity. So I was framing my entry on this inversion there. After we've obviously seen bullish structure, we put in high, low there, and that is why I entered. So I entered when we came back into this opening range fair value gap there, or inversion now. But what happened was I eventually got stopped out at break. So you can kind of see where I sold there, my position. So I got stopped at break on this candle here. So then I waited. I was like, okay, now, and we have these equal highs generated. Now let me just try to frame a better entry. So I got my next entry based off this little inversion. So this is why I entered on this candle. As soon as this candle dips back beneath here, that is why I entered on. And obviously it was within this order block perimeters. So we had 50% here, which we went into, and 25%, which we held very nicely. So I really liked the entry. I thought it was a good entry. So what happened was, what did we do? We took out this high and then came back to internal range liquidity. So I don't know if you can see. So we have this fair value up there. So we obviously took external range liquidity, came back to internal here, and this opening range fair value gap again, now inversion. And then we went and had that distribution to the upside. So I'm disappointed, to be honest, because yes, I moved up to break. I did have my stop originally underneath this inversion fair value gap. Moved up to break when we took out that high. Why? Because I wanted to see aggressive price action to these levels up there. And to these levels up there, I wanted to see a low resistance liquidity run. But we didn't get that. Knowing these conditions, I should have used the 5-minute as my structure instead of the 1 minute, and therefore I wouldn't have moved my stock to break even. I'd moved it once we took out these highs. So that was the trade there. As I said, that is how you trade within an order block. Approach or encroach that high there, which was the 15-minute high or 5-minute high. Therefore, you can trade within this order block. So the change in the state of delivery has already occurred. And that is why when we did eventually close above it, we didn't actually come back to that level because the change in the state of delivery has already occurred until we obviously took out these highs. Going into my third entry of the day, and this was the one which I took the L on, unfortunately. So you can see it here, actually. So what did I like about this? What I liked was we formulated these equal highs. So I therefore knew we would eventually push and take out the majority of this section and take out these equal highs, which I liked. We took out this low there. We also came back into this order block here, and then a little 5-minute FVG. So that was my framework for this entry. And what was I looking for simply? I was looking for an aggressive reaction. I was looking for this little inversion. So we had an inversion fair value gap there, and then we had a change in the state of delivery here. So that's why I entered where I did, and I obviously pumped stop underneath here. And that is why I got stopped out. Why? Because it wasn't during the macro period. We were just accumulating. You can see here, when you accumulate going into the lunch session, it will go through the whole lunch. Unless you're retracing, which wasn't what was happening, it was just accumulating. You would just expect this to continue until lunch. This is when we got the true retracement. As I said, that low stayed intact. And then we got the true move later. You can see here from the 15-minute, we had that protected low there for taking out this sell side. This is your short-term low. That's your short-term low. This is your intermediate term low there. So that now stays intact. And then you produce the higher prices. So that is where the run came during the afternoon portion. So I should have sacked it off from that point onwards, but the move did eventually take place and the bias was very correct today. So I am happy on that aspect. But that's how you would look to trade within a TGIF, or thank God it's Friday setup, after we've had that heavy distribution throughout the week. We've hit those daily, weekly, monthly objectives. Some multiple objectives have been taken and met. Therefore, you can expect a rebound on price. And that is what happened today. So cheers for listening to that, guys. Like I said, it's another different setup. It's another thing you can use in your trading. As I said, you learn how to trade within an order block, and also the TGIF setup, which can occur most Fridays, to be honest. So definitely bear that in mind. But cheers for listening. I'll catch you in the next one.